So those are the list of stocks that we are watching out for. Now on to the big story. Shares of the Adani Group nosedived after a report by Hindenburg Research revealed short positions and flagged multiple risks. The rout has wiped out 4.2 lakh crore rupees from the group's market capitalization in the last two trading sessions. Shares of Adani Enterprises, which kicked off its follow-on public offer, slumped more than 18%, and now it's below the follow-on public offer price of 3,112 a share. Meanwhile, the Adani Group issued a fresh statement saying Hindenburg's conduct is calculated securities fraud under applicable law. To clarify and address all issues regarding the Hindenburg report, FPO, SEBI probe and lots more, we are now joined by Jugeshinder Singh, Group CFO, Adani Enterprises. So thanks very much for joining us. Good to have you with us here on CNBC TV 18. I want to start with, of course, what is top of minds for everyone. How confident are you that the FPO will sail through?
Yes, so if you recall on the 25th, when we opened our anchor book, that was over 1.5 times subscribed. And then that was on Wednesday, and then on Thursday, this report dropped. And so there was this issue in terms of the volatility in the market. So where the subscription amounts were a little bit less, and as you correctly report. But we are confident that on the institutional side, that the entire issue is from based on our discussion, roadshow meetings, etc., will be fully subscribed. And that's why we clarified the rumors were going on. So we clarified on Saturday night that that the FPO will proceed on current pricing and on the current timelines. So we are supremely confident that from an institutional perspective, we are there, but there will be some pullback in the retail given such as the pricing differential and the volatility.
Would there be any change in FPO pricing? I mean, there is a significant difference between the current market price and the pricing of the FPO itself, right? So logically, the question is, why would anybody put in money there and not buy it from the open market? So if you're so confident this will go through, will there be change in pricing?
Yes, we will be the same issue. FPO will go ahead on the same conditions that we launched.
Okay, got that. Mr. Singh, but do bankers need to underwrite the issue?
We didn't need that, so we didn't never ask for it. We were always confident of the subscription, especially on the institutional side. We also had a huge amount of, as you know, we do. We're one of the few corporates who does domestic roadshows, so we are always very comfortable that there was a huge amount of domestic demand, and that was true till this volatility point. That there were nearly 40 lakh applications went out, and so I'm privy to that. But that was never an issue for us in terms of the demand, and we did that analysis last year, and that's why we could announce that we will do 20,000 crore, India's largest private FPO. So that underwriting question never came up in our thinking.
Okay, so for the people who are putting money in this FPO, how would this price difference work?
That's a very good question, because actually, I'm glad that our questioning is going into this element, because this goes to the heart of how we look at Adani Enterprise. See, in Adani Enterprise, if you look at how somebody ascribes value, the value is not like because earnings and it's P or that. The value of Adani Enterprise is its capacity to incubate good quality businesses. So the underlying value of Adani Enterprise is, what is the value of Adani Airports? What's the value of Adani New Industries, which is a green hydrogen ecosystem? What's the value of Adani Roads, Adani data center business, Wilmar, mining services, materials and metals? So that, even with this share price volatility, the value of those businesses have not changed. So when you're a long-term strategic investor or institutional investors, what you are saying is that, okay, they are looking at the fact, and we ourselves also look at it this way, is that, let's say I own 100 shares of Adani Enterprise. Then I know I will get 100 shares of, or in that proportion, I'll get my shares in airport business, in green hydrogen business, in data center. Now, those businesses anyways, as we have flagged in our roadshow, they will be coming to market somewhere in 2025 to 2028. So their value is nothing to do with today. And that value stays. So an institutional investor is looking at what number of shares they want to have. Okay, now value becomes important. You're going, but when you're looking at a long-term intergenerational investment, this value is less important than what value the airport will be or what value the green hydrogen business will be. There, the entire story is correct and the entire story is intact, and the execution capability is what people are betting on. And the execution capability of the group to execute large projects consistently over the last 30 years, people have seen. And so that's why they are comfortable that, okay, they understand that, okay, you could go to, but an institutional player also wants some substantial percentage. Could be 0.2%. That is difficult to acquire in the market, because then the price will again go up. So you're back to square one. So if there's that level of buying. So for them, it's just a temporary issue because the underlying value remains intact. And that's what would be understood as well.
Mr. Singh, has there been any communication between Adani Group with regards to clarifications that MSCI, which runs global indices, that they want? Has there been any back and forth? Have they asked you for anything? Can you confirm?
No, MSCI not reached out. They reach out to stakeholders. They do their normal work. We expect them to complete their work. We expect that over a period of time, this is a continuation of a process that they go through if there's a level of volatility. We expect that to conclude, but that's MSCI's position as to what they do. We believe that now that we have circulated our full, comprehensive, multi-100-page response to the report, which clearly establishes with documentary evidence that its report is just full of misrepresentations, and I'm being charitable, or at worst, it's just outright lies. We are confident that once people have the chance to now digest the published report, our response, that they will conclude that this has been actually a very malicious, timed, deliberate misrepresentations put out specifically to sabotage the FPO.
Okay, so the report is unsubstantiated and malicious. Got that. Any communication that you've had, Mr. Singh, with the SEBI? Have they asked for more data from the group?
No, we put our report out. Its report is reports gone to our websites, to SEBI, to regulators, to investors, to banks, to rating agencies. So it's a comprehensive response. It's point by point response. So therefore, it's a few hundred pages of response. So we expect that if there's question, people will take some days to go through hundreds of pages. But the thing that I would like to, if you indulge me for 5 seconds, I would like to highlight is that there is, putatively, we were asked 88 questions. We answered all of them. 68 of those questions were subject to no research or any 2-year period. Somebody could have picked it up in 1 day because they are our own disclosure. Yeah. 7 questions were questions like asking, what do you mean by growth with goodness? And that kind of rhetorical questions. So that becomes 75. 6 questions were related to already disclosed from a shareholder perspective. Like we disclosed in the wholesale offering open offer document, we disclosed our overseas holding structure fully. Before that, it's disclosed to SEBI. Then we have disclosed domestic service, those kind of questions. 6 questions are related to basically one of the family members as to how they run their private family office. Okay, now I can candidly share with you. I'm the senior most finance executive in Adani Group. I've been there for 11 years. In 11 years, I have not had a business or working meeting with Mr. Vinod Adani. The reason is very simple. He's not the executive in the business. And even I am not aware of how he manages his family offices or how XYZ manage their family office. It's completely separate. And many promoters in India have this. Their family offices are completely separate from their businesses. The same thing is here. So you put those 6 questions aside. Rest of the questions are a direct lift of our own disclosure and converted into misrepresentation and then put into the report.
All right, Mr. Singh, but will you, go the legal way, or do you think the disclosures that you've already put out will put to rest all the issues? What are you going to do?
Our first objective was to see, when somebody does this kind of stuff, we want to also give confidence that you are dealing with the new India. You are dealing with a properly regulated market with good institutions. Okay. First thing we establish is that the disclosure standards of Indian institutions and Indian corporates are high by this action. That is, nothing in that report comes from research, it comes from our disclosures. Secondly, documentary evidence we provide that they have misrepresented at best and misrepresented facts on top of it. So now the statement that you referred to is related to our legal counsel saying we will evaluate everything, and they are evaluating everything. So conclusion that legal review reaches, that will happen over some period of time. But prima facie, naturally, they want to pursue, and damage has occurred in India first and foremost, and people need to be brought to justice in India. Okay, we want people to face justice if there are issues in India, and but that would be a matter for our own legal advisors to pursue. We have handed them the same report that we've now put on websites. And therefore, our legal team has that, and they are pursuing everything, and we'll see what they conclude over the next coming months.
And we'll wait for that. Mr. Singh, the other issue which has been raised is debt, right? Could you tell us what is the aggregate gross debt across the Adani Group, listed, unlisted, all companies? What's the aggregate gross debt? Not net, but gross debt. Go on, sir.
So the gross aggregate debt position in the group is just about 30 billion, of which $4 billion we hold in cash, approximately. Just under $4 billion we hold in cash. And the cash holding is required based on our statutory requirements, like DASRA's, some non-statutory discretionary requirements, like we have a policy to maintain, say, maintenance capex reserves, etc. And then the other one is that we also like to retain certain liquidity positions, which is that every company needs to have they calculate it like this, that for the next 12 months, what is your fixed commitments? And you must hold 1.25 times that fixed commitments in cash. So that's where it calculates, and so we about 4. So our net position of debt, net of our cash, which we can use, is $26 billion. Against that $26 billion, our EBITDA at portfolio level is 8 billion. So we are, give or take, just over 3 times debt to EBITDA at a group level, and that's the aggregate position. So on a coverage basis, our total debt service cover is just over 3 times.
I don't know if you mentioned that, but could you tell us how much of this debt is with the Indian banking system specifically?
Percentage approximately 23%. So approximately about from a total debt drawn basis that we have currently using out of our gross debt, we would have just over $6 billion to the domestic banking system. So 6 billion is what because the way the domestic banking system, there was some sanction limit. So if I just go that on the sanction basis, it will be about 9 billion, which we have not drawn yet.
Okay, so out of the $30 billion gross debt that you're sitting on, you're saying about $9 billion is the exposure that you have to the domestic banking system. Got that. And thank you for that clarification. Do you think that financing the overseas debt, this amount in terms of a rollover will now become costlier for you? You also have a very aggressive capex plan.
We don't have immediate maturities in that manner because our debt is long term. So about 50% of our debt is matched to underlying contracts. So we are limited maturity. Now the new borrowings which we have to do will be done on the asset based on the ratings. And yes, you can have, like, for example, what you're referring to is that can happen if there is a very limited set of investor pool. And then we have a very diversified investor set. So we have, like, good set of 26 global banks, 9 domestic banks, domestic DCM, 144A issue, US private placement issue. We are one of the few Indian companies registered to issue debt in US. We are SEC registered. Okay, we have one of our companies gone through SEC audit, which is Adani Green. And so product-wise and separate gives us the flexibility. You can have investors fall out because of volatility issue. They might have their own internal criteria on such things. But our pool of investors is about 160. So the way when we do our issue, way it happens is that out of 160 investors on average, about 100 bid for our paper, out of which about 50 then subscribe. We might have some investors fall out, some new investors come in. So I don't expect the number of about 160 odd investors that look at our assets change. And if that remains, then we will pay what is the market price based on our ratings.
Well, Mr. Singh, the Ambuja Cement asset is a solid asset. It's got net cash and it's churning up a lot of cash as well. But the street wants to understand what is the level of pledging on Ambuja Cements. And just to clarify, did any shares get sold over the last few days?
But the first thing is that 0% of Ambuja shares are pledged. Okay. We clarified that originally also. What happens is that when you acquire something via holding company structure, there we always give a standard covenant that we will hold X percentage of the asset underneath. That's how we design the capital structure. So there we have said we will hold 63% of Ambuja. Now we are going to end up owning more of it because we've issued warrants and we'll settle the warrants and we'll own more. But that's what we have confirmed. So their concern, that what happens is that we simply say that we are not seller of our equity, we haven't sold anything. So it's no link to the share price. It's linked to the percentage of the underlying asset you hold, which is the same today also. It is independent of the share price. But now what happens is that under SEBI's regulation, SEBI just has a heavier regulation, which is a good regulation, which is simply that please report encumbrance. So and if we say that we will hold 63%, under SEBI's strict reading of it is considered encumbrance. So that gets misinterpreted and got misinterpreted as pledge. That is not the case.
Mr. Singh, any other pledging in any other group companies? Is there any pledge that got sold off in the last few days of volatility and sell-off that we've seen?
Absolutely nothing of that sort will happen at all, because at a promoter level, we are net lenders to the market.
Okay, now another issue which has been brought forth is about auditor pedigree, right? That Adani Enterprises is audited by a small, lesser-known firm. How are you planning to address this particular issue?
It will actually only take about 2 seconds for anybody at CNBC to confirm that this is a misrepresentation. So what they have said is that AEL's auditor is a small audit firm. The first thing, I don't like the word small audit firm because the person accusing of small firm is a small firm themselves. So that accusation itself is bizarre. But nevertheless, AEL is as incubator. So its key thing is how it is looking at its individual businesses. So for airport, for example, Mile Airport, auditor is Big Six. In mining, the auditor is Big Six. And anybody who has done any research, like I said, it will take 2 seconds to know this. So obviously they knew this. And yet they went ahead with misrepresentation. They could have said that we understand you have on the assets below, actual assets, you have Big Six. Why don't you have Big Six on AEL level? That's a legitimate question. But here it was not a legitimate question. It was not an issue of question. It was a hit job. And the hit job on AEL to sabotage the FPO. So intention was not to do it, intentionally mislead. And so it became an issue. And then that's overall level. But then we have another policy also, which we would like to share with the viewers, which is that we have 9 listed companies, of which, barring one, all are big 6. Then we have another policy, which is that from time to time we do last year we did a disclosure review. Now that disclosure review was done across all Adani branded companies, and that was done by big 6. Then we do a spot review. So we picked, last year we picked in our risk program, it comes to me. And we picked hedging policy review. So in the hedging policy, and a big 6 accounting firm was appointed, and they said, please review all our hedging policies. So they do the review. So, and we do this on a periodic basis. So it's a very consistent. Then our audit committee is 100% independent. We are one of the few groups in India that have audit committees 100% independent. So there are a series of steps that we have for audit integrity. So it's a completely bogus misrepresentation, and it's like not misrepresentation. I think if somebody knows, it's not even a misrepresentation. If somebody knows, and you can verify in a few seconds, it is even more than misrepresentation. It's a deliberate misrepresentation.
Okay. Has there been any communication at all from the regulator on the FPI holdings in the Adani Group stocks, which was under scrutiny a while back?
No, we have a register we maintain. It's available whenever SEBI or regulator can ask. They can get it from us. That material non-disclosed material information, etc. So we comply with all of that stuff, but we have no specific to and fro on information that we possess, because our holdings are fully declared clearly, and then matters related in this current sort of this made up report, we have shared our report with SEBI as well.
All right, Mr. Singh, need to ask you this question before we let you go. Ambuja Cements, there's a warrant conversion that is pending. What's the latest on this? Is this on track?
We continue to support that when the company needs within the requirements, and they will issue, we'll subscribe. For us, it's not we will not make any long-term decision on short-term volatility. It's they were a disaster for problems in the longer term. So we are, because we fundamentally, that business is exactly the same, and its profile is exactly the same, and it will return to its profile. And it's doing well, and we are fully supportive of all of our businesses.
Okay, sir, thanks a lot for joining us and giving us all of those clarifications. Very important from a market standpoint. That's the Adani Group saying that the reports are completely unsubstantiated. Of course, a long interview will play through the course of the day. But the sum and substance is that the FPO will go through in its entirety as planned. And the total debt that they're currently sitting on is about $30 billion, out of which $6 billion is the exposure that they have to the banking system, and an additional $9 billion is the sanctions that they have. So a total of a little over 23% is the exposure that the Adani Group has to the Indian domestic banking system. Well, Hindenburg has come back with a response on the Adani Group's rebuttal, saying that the Adani Group has failed to specifically answer 62 out of the 88 questions that Hindenburg put forward to them. The core allegations of the report with respect to suspect transactions in offshore accounts are left unanswered by the Adani Group, and Adani's 413-page response included just 30 pages focused on issues with respect to Hindenburg's report. It also strikes Hindenburg as obvious that Vinod Adani is a related party to the Adani Group. No clarification was made to the group's relationship with Chang Chung Ling, despite many linkages that Hindenburg put on board. So this is the response that Hindenburg has put on the Adani Group after the rebuttal that came through. So there's definitely a lot of back and forth that has gone through. We'll get you more details on all of this through the course of the day. In case you missed out on that interview, we'll play excerpts of that over the course of the next couple of hours as well. For now, we have just about a few minutes before we head into the pre-opening session. So let's take a short commercial break. We'll come back with lots more on the market. Stay with us.